Hey traders. So basically what I'm wanting to do here is talk about the major indices real quick and where we're at. And I know a lot of people, some people think it's the end of the world. The markets are just going to absolutely implode. Others think it's by the dip. Uh, I am leaning more to a major correction has started, and we just don't know how fast it's going to, everything's going to break. Okay, that's pretty much why I'm leaning here. Okay, so basically, two things I want to really point out here on this market on SPX. Okay, one, I have these trend lines right here. Okay, and these trend lines are denoting the 20 SMA, 50 SMA, and 200 SMA on the daily, weekly, and monthly time frames. Okay, and I drew them all on one chart. Okay, so my main takeaway here: we're in a lot of congestion on these MAs. Typically, whenever you break it away from those MA congestion, that's whenever you start getting the much bigger moves. So we still do have technical support below us here on SPY. So it's I don't think you're going to come in tomorrow and see a runaway situation, barring some sort of major news. Okay, if anything, we're coming into some really significant earnings this week. Uh, it kind of makes sense that there's going to be some dip buyers come in here and try to support this market, and give us an opportunity to short, even come back in and short at higher prices, in my opinion. So that's one thing I was wanting to point out here. Number two, on SPX, back in April, basically, all of a sudden the MACD started diverging against the higher move in the SPX. Okay, now I can't show a volume profile on SPX, but I can go over to SPY. Okay, and I can illustrate it there. This is using market webs, and this is a yearly volume profile. And what we saw at 425 last year, starting in April, big money started selling, and they've fought tooth and nail, and nobody wanted to take it down. And so that was back when the Federal Reserve was buying up debt too. So keep that in mind. Now they're not buying debt anymore, corporate debt. So keep that in mind. And so eventually we resolved higher, but all of a sudden when we started resolving higher, it started happening on lighter and lighter volume. Okay, so we have this, it's a really critical indication that market has lost significant steam here. So definitely keep that in the back of your mind going forward here. So I know there's people on both sides. I am in the bearish front, side, but like I said, I don't think we're quite there yet, and we could actually see a bounce before we come crashing down further. Okay, so basically, that's pretty much what I want to say on that. So, the Nasdaq has been leading with the divergence. Okay, so the divergence on the Nasdaq actually started in February, and what we saw, because it's leading, it literally has broken the uptrend starting last week. So we literally have a breakdown away from the uptrend starting last week. So heads up on that. That's why the Nasdaq they just kept selling right into it, selling right into every little pop. Okay, and that's pretty much what's going on here. But this started 2 months earlier than the S&Ps, and look at the relative weakness here. So we have a lot more relative weakness on the Nasdaq. For the most part through 2020. We had some things, Apple, Microsoft, amazing moves in some of the mega techs, but tech as a whole was not doing that. So I do want to point that out. Um, so basically, definitely want to keep this on watch going forward here, showing a lot of relative weakness here on the comp. Now, if I do a volume profile, similar situation. Put the cues in. Up. Okay. And basically, right here in February, relative strength started giving up. And look here at the volume profile. See how the volume profile last year just exploded on volume right at this price. All kinds of volume came in here wanting to sell. So basically, this is, in my opinion, a textbook head and shoulders scenario. Okay, so your shoulder starts down here. Okay, so there's your shoulder. Here's your head, and technically it's not actually showing it here on the Qs, but the comp has already broken. The Qs technically have not, so keep that in mind going forward here. So basically, our support would be all the way down here around the 170, around the 175 area to the downside. Okay, that's April 2020 support. If you go back to the comp, that would complete the pattern, which could be happening here in the next couple months. I don't think I have that one drawn out here, do I? April. It's March. Well, I think it's right down here. So I think this is right here. The 10,380. I'm pretty sure that's where it's at. It's right down through here. That's where your support would be if this thing does start to break down in a big way. And if you do the measured move, that's probably pretty close to this support area down here. Okay. Heads up on that. So the 10,000 on comp. Obviously, that's in the cards here. Okay. And then, in my opinion, the worst of them all. Look at this. Just absolutely destroyed. They held it flat. Couldn't catch a bid for nothing here on the Russell. And now we are breaking down critical support on our Russell. Okay. I don't have it all drawn out here on the rut. Okay, but I can go over to IWM. I do have it drawn out. And bottom line here on the volume profile, you don't have that, the volume distribution. We're just literally breaking away from that volume distribution now. Okay, so this is game. We're just now finally. So this actually looks like this is the left shoulder down here. This is your head. This entire area is your head. Okay, and we're just starting to break down the head, in my opinion. This thing can drop absolutely like a rock because you can just tell by the volume profile here where price is content. Ultimately, where it is content, major supports down here at 145.66. Okay, so just heads up on that. That would be your possible major support if this thing does continue to completely unwind here. So you got the same thing going on here. Divergence on your MACD, higher prices, your Dow Jones Industrials. They have just been absolutely massacred here to start the year. They just cannot hold a bid at all on these industrials. So just keep that in mind here. We're right on trend support. We closed out the week right smack dab on trend support. Okay. Similar situation. We had negative divergence, okay, higher prices. Then we even put even higher prices in, and we tried to catch momentum right there. Looks like that this situation is trying to resolve to the downside, where this could be the based on our volume profile, that we might be breaking this all down here, and breaking down below this trend line. So heads up on that. Remember, we got a lot of historical volume right here, so on a counter basis. So but ultimately you would have to be targeting potential 2020 lows here on our semiconductors, possibly in a very short time frame. So keep that in mind. Another one I want to show you guys is the OEX. So we are in a trend line. We are at the trend line low here on the OEX. That's the S&P 100. Similar situation. We were into that congestion on these MAs, but we could easily start breaking out of that this week. But definitely, I'm still thinking they're going to try to hold it for at least for a few days, and then by the end of the week it might be a little bit trouble. But look, we definitely have a similar situation. You have that divergence going on here. Keep going higher, but the MACD is just flatlining. You've been flatlining for a very long time, for almost a year and a half now. Almost a year and a half. We flatlined on the MACD, but prices kept going higher. So technically, major warning sign. Okay, I'm going to go through a few of my core stocks that I watch. Tesla, it's pretty much MACD's going with, with the price. Momentum's going with the price on that one. Not really seeing anything on that there. We got some big gaps between our MAs. So that's your worry sign that the market starts to sell. You got big gaps that it can break down too. So this can be a big mover to the upside or the downside. Very dangerous. Uh, Nvidia, similar things. We're into the bigger gap areas. If we come down into the 205 area, we might find a little bit of support down here. But it obviously does not look like we were into that support area yet for Nvidia, Microsoft, another one of the major ones. Remember last year, the CEO of Microsoft, under the radar, sold half of his shares before he had to announce it. You know, just keep that in the back of your mind going forward here. When the CEO liquidates half his shares before he has to start reporting, he doesn't set a time frame where he's not reporting that big liquidity. It's something to think about in the back of your mind. But we do have near time support. We do have earnings this week. I think Tuesday, yeah, Tuesday or Wednesday. So, so obviously they're going to try to keep this thing probably around the 285 area into those earnings, but definitely something to think about going forward here. And obviously, if you draw a trend line, a channel, we're getting awful close to that channel low on that one as well. So keep that in mind as well. Facebook. Okay, Facebook. I think yes, Facebook's in all kinds of trouble. Here they are trying to rebrand themselves because earnings were so bad last quarter. In what could be a down cycle in the markets. Because even if you can't rely on their prior business model and you're trying to reinvent your company, it just bodes very bad for you want to know what you're investing into, and if the company's reinventing themselves, it's a really bad possible scenario if this market just does decide to start liquidating. So, man, this one here is pretty much trading with the MACD on that one. Okay, Boeing. Okay, trading with the MACD pretty much here. Okay, so you don't really get it. We're into a major congestion area. Easily could take out the 2020 lows. So just keep that in mind here. Very easily, it's only 185 is the 2020 lows. If this market starts to sell off, so could very easily not a lot of support below the 185. That would take us back down to the 145 if we did get some selling pressure. Like I said, we're into congestion. We have to actually start holding above the 228 before we can actually start seeing an explosive move to the upside. AMD, that's the semis. Got quite a bit of expansion between these MAs, so definitely, it really doesn't look like It's coming all the way back down to 105 area here in short order on that one. And then Apple actually became a $3 trillion company a few weeks back. It's coming off that $3 trillion valuation, and it's probably going to come off in a big way as soon as the earnings come out. I have no doubt Apple's going to have good earnings, but the rate of ascent that this company has had is unparalleled to anything. Yeah, look at this. It has gone straight up. Okay, so definitely keep this in the back of your mind. This is one of those. This and Microsoft are two of the companies that could, in a sell-off, could really, because since there's such a huge market cap, they could really. It takes a lot of money to hold them up at higher prices. Okay, that's what I'm getting at. So that's what I'm trying to say here. If the markets were to start selling down here. So definitely keep that in the back of your mind going forward here. Where's that weekly on that? Double check. I want to check out MACD on Apple. And yeah, the MACD is pretty much they're it's trading with Apple. So doesn't look like major problems yet here with the MACD and everything. So thanks a lot. It's 14 minutes. So like the video if you like it. Please put comments below. Okay. And so basically, looking a little bit iffy with the semiconductors because I think there's a lot of room there that they can come down even lower. And You know, we've already seen the biotechs really. If you look at XBI, XBI just absolutely get massacred. That's the worst area in the market. If you go out here on on the weekly here, you know, it is just getting crucified here. It started getting crucified last year, and it's just continuing the crucifixion here. We're probably actually going to be seeing those 2020 lows here. That's probably going to be the first area here in XBI to be revisiting those 2020 lows on that. So I don't want to be too bearish to markets because, like I said, you know, we might be going back to all-time highs after these earnings come out. But I find it very difficult for companies to issue really, really strong guidance. I don't think they have the pricing power because, you know, I just bought a laptop, you know, and just there before Christmas, I couldn't even touch what I just got. I mean, what I just bought was going for close to $2,000, and I picked this up for 800 or for under 800. Okay, so I don't think that pricing power is out there. Okay, to digest all the higher wages, to digest all the higher commodity prices, to digest a higher distribution cost. You know, there are so many things that are impacting these businesses that yeah, I just see a and then plus a bunch of these businesses they're going to stop their share buybacks. You know, in a higher interest rate market environment, they do not want to be issuing new debt to buy back their shares. You know, that is the worst scenario, and that's where we're ultimately going to. If this thing we start getting in a liquidity crunch, most people don't realize how much corporate debt has been written. And so basically, what they have done in effect, so they wouldn't have to pay out dividends to individuals like me, they have bought their own shares back and they're keeping those dividends in house. Well, that's fine and dandy till they have to refinance that debt at higher rates. Okay. And that's the situation we might be having here, you know. And depending on how, if these rates start getting away from the Federal Reserve and the U.S. government, something happens, you know, all of a sudden, all this debt's going to be maturing here in 5 years or something like that, and you know, we don't know what the interest rates might be. You know, 8-10% interest, you know, uh, and they got to roll this debt at these higher rates. All that's going to be hitting the balance sheets big time. So just keep that in the back of your mind going forward here. You know, the government has a vested interest keeping these rates low. You know, it's in their best interest because not plus with all the debt that they're trying to issue for government stimulus. You know, and but the Fed has a mandate to tame inflation. You know, so it's a really bad situation. So who's going to lose in this? It's probably us consumers. The inflation is probably going to just continue and continue to just skyrocket, and we're probably going to see several years of 5% inflation. That's kind of what I'm thinking because the U.S. government, they cannot have high interest rates. Okay, yeah, that's just some ideas. Please share what you're thinking. Thanks a lot.